Today in this presentation, I'm going to explain what is GDP and how it's calculated. What is GDP? It is the market value of all financial goods and services produced in a country during a period of time, typically 1 year. And economists use GDP to measure total production of the country. GDP includes only the market value of final goods. Then, what does it mean, final goods? Final good or service means a good or service purchased by a final user. Um, for example, like I use iPhone and I got it from Apple Store. So in this case, I'm the final user, and this iPhone is a final good. But like Apple does not produce components for iPhone, it just buys them from other companies such as Foxconn or Samsung or LG for displays. Interestingly, so those components are intermediate goods, not final goods. And plus, there are two more things we should know. First one is GDP is measured using market values, not quantities. When we measure total production in that economy, we can't just add together the quantities of every good or and service. We measure production by taking the value in dollar terms of all the goods and services produced. And second, GDP includes only current production. GDP includes only production that takes place during the indicated time period. For example, GDP in 2022 includes only the goods and services produced during that year. In particular, GDP does not include the value of used goods. If you buy a new iPhone at the Apple Store in Southgate Store Center, this initial purchase is going to be counted in GDP, but like after a few months, if you decide to resell that iPhone, that transaction is not gonna be counted in GDP simply. Okay, how GDP is calculated? There are three approaches used to measure GDP. First one is product approach, second income approach, and third one is expenditure approach. Let's see. First one, product approach, also known as the value-added masses. It's simply the gross value of output minus value of intermediate output. Okay, second, income approach. It sums up total incomes in that economy to estimate GDP. It is broken down into four groups: compensation of employees, gross operating surplus, gross mixed income, and taxes minus subsidies. And third one, expenditure approach. It also has four groups: final consumption, gross fixed capital formation, and inventory investment, and net exports, which is exports minus imports. Now we've learned these three approaches to calculate GDP, and what should we know is they're all like equivalent, because the market value of a good must equal what a buyer spends on that goods, and the seller's revenue also must equal a total income which is labor income plus after-tax business profits plus taxes. So now we're going to calculate GDP of Canada by income approach for practice. As it is the total income in Canadian economy, it is going to be a grand total of these four groups. First one, compensation of employees. It includes all the incomes, including the benefits paid by governments such as EI and CRB. That was the financial support to people who lost their jobs or could not get a job due to the impact of COVID-19. And second, the gross operating surplus, which is the sums of income generated from property or capital like rent or interest, and also income from entrepreneurship as well. And the third one is the gross mixed income, which is the sums of small business income. For example, independent accountants or doctors runs their own clinic, like walk-in clinics, can be considered in this group. And the last one is taxes minus subsidies, which means total taxes that the workers in Canada pay to the government minus the subsidies paid by government to support particular industries or companies in order to protect them for a national interest. Okay, thank you for your attention. That was my presentation to explain what is GDP and how it is calculated. Um, if you have any feedback, please let me know. Then I'll try to like fix it or make it better next time. Thank you.